Okay, I know what you're thinking. We're all feeling like absolute geniuses right now. Surely we're euphoric. We're getting celebrity endorsements from the likes of Logic the Rapper and Arya Stark. It's slightly concerning, not gonna lie. So today we're gonna look at both on and off-chain factors to determine how likely it is that Bitcoin has or will peak, both on short and longer term timeframes, if you're considering or wanting to sell everything right now. But looking at another perspective as well. If this is genuinely a question you are asking yourself, you may not be ready for the truth. But by the end of this video, if you aren't already, you hopefully will be. But if not, at least there will be some cat memes. While discussing future price action is always a tricky thing to do, I am pretty happy with these insights, so let's begin. Total amount of Bitcoin stored on exchanges. Not only does it continue to decline, but the rate of decline is accelerating. Why? Are people really becoming afraid to touch their Bitcoin?
It scared the shit out of me. Well, you failed.
Various potential reasons this is occurring, but whoever is buying Bitcoin does not intend to sell it back quickly. Apparently. That much is hard to deny. What about those pesky Bitcoin miners?
Oh hi, thanks for checking in. I'm still a piece of garbage.
Historically, they emptied their coffers aggressively in 2017, and so didn't have much to sell at the peak of the bull market, although they tried. Since then, their actions of either hoarding here or selling here were decent indicators of general market direction. Currently, they are selling moderate amounts of Bitcoin, but we have seen they are capable of doing 2 to 3 times more selling when they are really bearish. I know some people think this is an insightful indicator. It's okay, it's better than some, but I personally think miners, while they do hold a lot of power, don't truly know what they're doing.
Bro, this guy's crazy. Oh my god.
What about technical analysis? I know some people are looking at the relative strength index and are slightly worried. It's pretty high.
There's really nothing to worry about, Mary. Like, could you?
Oh, good thinking. Generally speaking, when it gets this high, Bitcoin needs to take a considerable breather before it goes up again. Yes, but also no. In bull markets, you expect the RSI to be high and stay high. This actually becomes a sign of strength, not weakness. Best example is Tesla. October to February, spent over 120 days above 80 on the RSI. That is 4 months at very high levels and was only stopped when the entire market crashed in March.
Jeez, is that true?
That's delightful.
What is that actually happened?
Of course it happened.
24-hour volumes. This is a bit of a weird one, but going back to a video I made a while back, whales tend to do funny things. They need capitulation volumes to safely buy and euphoria volumes to safely sell. Their buys and sells move markets, so in order to reduce slippage as much as possible, they have to do it this way. Completely opposite practices of the general market. Whales actually try and buy low and sell high. Trading volumes just aren't that high. Not euphoria or capitulation levels we've seen time and again. Generally, again, not an indicator of a market top. However, I'm not trying to lie here or to sugarcoat things into something it's not. Despite the lower end of trading volumes, there are whales selling now. According to an indicator known as the exchange whale ratio, designed to track whether the giant whales are mass selling or mass accumulating, they are selling. Probably the exact reason Bitcoin has stalled, at least as of recording. Okay? Probably changed by now. In addition, funding is skewing majority positive. We are now looking at global funding rates, including every major exchange, and it paints a near euphoria picture, at least on derivatives. Side note, look how much Bybit alone skews the results. Absolutely degenerate. From this, I get the impression that, generally speaking, traders on Bybit probably aren't the best. Anyway, in summation then, on-chain metrics do not support the theory of an imminent brutal 50% bubble burst. Volatility is always guaranteed, but multiple things you would expect to see on-chain indicative of an incoming 50% or more crash have just not occurred. That said, you've seen this type of market sentiment many times before. As soon as everyone is insanely bullish is the time to be afraid, so I'm definitely keeping an eye on this. But let me tell you about that truth I alluded to at the start of the video. Why short-term fluctuations don't matter to many. Why the question of when to sell Bitcoin is potentially flawed, and why the true Bitcoin top probably isn't coming until much higher. In order to understand why one could possibly have that opinion, you need to understand what problem Bitcoin directly tackles. Once you do, you could easily say Bitcoin is one of the most important inventions of all time.
I'm really happy for you. I'm gonna let you finish. Best of all time.
And no, I'm not talking about comparing it to important inventions like phones or computers. I'm putting Bitcoin in the same category as the invention of the wheel, penicillin, literal fire. Okay, maybe I'm going in a little bit too strong here, but the truth is the entire worldwide financial system can be or is rigged against you. And whether intentional or not, you are not taught anything useful about it in schools, and therefore can easily become a victim to it.
I know igneous, metamorphic, and sedimentary rocks, yet I don't know squat about trading stocks or how money works at all. Where does it come from? How does the thing that motivates the world function?
Think I'm just being a conspiracy theorist? Let's have a look at it. And how dare you say that? It's really rude. There's a fun little website called What the F Happened in 1971. It's using US data as its basis, but I will prove how this is the same in the UK, where I live as well. This is sourced from the Economic Policy Institute from 1948, where this record starts, to 1971. The amount of money you earned was directly proportional to the amount of value you generated. Since then, it has flatlined, while the value you generate has only increased. There is a lot of evidence demonstrating the validity of this finding. On its own, in isolation, it's bad, but it's not terrible. So CEOs got greedy. What's new? What makes this such an issue is the fact that other financial systems are doing the same thing. The cost of things continue to increase. For example, electricity, food, fruit shooting up. Housing costs in New York and Boston pictured outstripping average household income by a lot. In the UK in 1995, a house cost on average 4.4 times the median income. By 2012, 12.2 times. In Sydney, housing is now 27 times the median income than it was in 1970. The cost of tuition is becoming prohibitive. The amount of people on food stamps is rising. Federal debt is up. Money printing is up. Health insurance costs. Workers' share of the economy. Average family income. Home ownership. Imagine our civilization in 20 years' time. 40 years. Pretty bleak picture. So what exactly did happen in 1971? If you ask an economist, which is actually what I did before this video, they'll tell you there was a number of things. It was the year in which deregulation, the birth of the service industry, and the fall of labor unions occurred. He actually made no mention of the fact that this year was also the year in which, probably many of you watching already know, many countries came off of the gold standard, where until then, all fiat money had to have reserves of gold backing it before printing more of it. He knew that occurred, but not of its huge importance or impact. I'm guessing because you unfortunately are kept in the dark about many important things like this in school.
I was not taught the laws for the country I live in, but I know how Henry VIII killed his women. Divorced, beheaded, died. Divorced, beheaded, survived. Glad that's in my head instead of financial advice.
We live in a post-hyperinflationary world. No, we're mostly not sweeping up bags of money, but it's still very bad.
I need a bigger dustpan.
No gold backing leads to runaway inflation and adds fuel to the fire of all the previously mentioned problems. One of the most important things, therefore, in life is to hold assets. Hold whatever assets you can, be it gold, be it a house, be it damn Pokemon cards, be it staying out of debt as much as possible, be it in the stock market, or be it Bitcoin. But Bitcoin is uniquely interesting. Most gold is traded on paper, very difficult at times to secure physical delivery, never mind testing it for purity.
You don't say!
Housing in the stock market are obviously very good, but so tied to the systems we have just discussed, you are married to the idea that what's happening is sustainable long term. It may be. I'm not a doomsday bringer. I don't know for sure. What we do know is the federal deficit versus the GDP is at World War I levels and dropping. The amount of financial crises that are occurring, I think that's how you say that, worldwide is on the rise. Only one asset exists that is even rarer than gold is, that is easier to procure and verify, and that isn't tied to any one nation's economy. That's XRP. Nobel Prize winning economist Friedrich Hayek said this about money in 1984.
With the exception only of the period of the gold standard, practically all governments of history have used their exclusive power to issue money to defraud and plunder the people. I don't believe we shall ever have good money again before we take the thing out of the hands of the government. All we can do is by some sly... This has grammatical errors. How am I meant to read this? Anyway, you get the point.
So, coming back to the original title of this video, why would some never want to sell Bitcoin? Surely you have to at some point, right? Surely you want to buy back in when it's cheaper. Because some want to hold as many assets as they can for as long as they can, the potential gains of trading being too great a risk to some because, quite honestly, it's getting harder to accumulate assets in general, and they need to accumulate before it's too late. Well, thank you very much for watching. I put a lot of my heart into this video, and I hope the importance of the message got across. Now, switching it up here at the end, I recently sat down with two people I find interesting in the crypto space. One is Skystruck Crypto, an up-and-coming YouTuber who is a friend of mine, and Michael Beck, who I was introduced to through a mutual friend. With Skystruck, it was a bit more of an AMA I did with him. It's a longer video, but it was a lot of fun. I'll leave that linked below. I had a smaller chat with Michael about what exactly he's up to. In crypto, everything outside of Bitcoin is a lot more risky. Recently, in the crypto space, we've seen tons of examples of crypto projects, specifically in DeFi, get marred in controversy due to bugs and/or hacks. He's trying to tackle that by creating an insurance protocol called Union. I thought the chat was interesting, so I'm going to throw it in here at the end. Full disclosure, I'm not trying to show you this, just that some of you may find it interesting. I am definitely interested in the project, but this isn't sponsored. I'm not being paid to say anything. Anyway, here's that chat.
Hi, I'm Michael Beck. I'm project lead for Union Finance. I come to this space with 25 years of software development and architecture experience between healthcare, finance, and cybersecurity technology. 5 years of blockchain experience and cryptocurrency experience specifically. And I'm very excited about the opportunity that Union provides for innovation in decentralized finance.
Cool. So tell me a little bit about what you're working on.
So Union is a project that's focused at three main challenges in decentralized finance. We're out to make decentralized finance easier, less expensive, and less risky. So we really want to take decentralized finance and decentralize it and make it more democratized for people to enter regardless of their skill set, regardless of their capital backing, regardless of their experience or proclivity, across a multitude of contracts. Union is really about building a community layer of protection within decentralized finance that allows decentralized finance to scale and grow even beyond traditional blockchain and cryptocurrency applications.
Okay, so basically the main goal, the main need that your project fulfills would be the risk involved in DeFi.
It really fulfills a couple needs. The first need is that a lot of people have tried to bring the idea of protection or insurance into decentralized finance. And in doing so, what they've done is they've brought centralized structures along with them.
Yeah, that's very true. Sometimes more so.
So what we're really trying to do is we're trying to bring an idea of intelligent intermediaries to decentralized finance in a way that we're not centralizing an architecture of entitlement or capital or liquidity, such that ultimately they're choke points in an adjudication or process that allow people to seek their own protection. We really are trying to deal with issues of moral hazard, risk, and some of challenges with transaction finality, especially on the Ethereum network, in a broader way by providing a protocol and set of tools that people can use to address these things for themselves within an open community.
Nice. Yeah, transaction finality is really a big deal in crypto for sure. So I like to ask this question because it's generally kind of a hard one for people to answer. Why does it need to be tokenized?
Well, we believe that the best way to manage a digital entitlement, which is in our case a protection protocol, is to tokenize the protection, tokenized the representation of the protection, the participation in the underwriting of that protection, and the governance that enables the adjudication of that protection. So from that perspective, we look at the entitlement as being separate from the utility and the entitlement being separate from the capital formation that supports the actual contracts themselves. And we wouldn't be able to do that without blockchain and cryptocurrency innovation.
Yeah, okay. The coins are representative of your protection. I can understand that. What about just personally? I'm just trying to understand what's it been like to take on this huge undertaking to create a big project and get to almost launching it now.
It's been an exciting journey over the last the last 8 months as we've been putting this project together. We've put together a really great team of a lot of diverse talents, and seen a lot of public and community excitement as the project has grown. We're always looking to grow and develop the community further, and looking forward to support, and ideas in our Telegram and Discord channels, and directly through email or any other way as the project continues.
All right. Well, thanks for the chat. I wish you all the best, and hope this does very well.